Bitcoin is key to an abundant clean energy future by Square in collaboration with ARK Invest. In this memo, we aim to explain how the Bitcoin network functions as a unique energy buyer that could enable society to deploy substantially more solar and wind generation capacity. This deployment, along with energy storage, aims to facilitate the transition to a cleaner and more resilient electricity grid. We believe that the energy asset owners of today can become the essential Bitcoin miners of tomorrow. Highlights: Bitcoin mining presents an opportunity to accelerate the global energy transition to renewables by serving as a complementary technology for clean energy production and storage. Solar and wind are now the least expensive energy sources in the world, but are hitting deployment bottlenecks primarily because of their intermittent power supply and grid congestion. Bitcoin miners as a flexible load option could potentially help solve much of these intermittency and congestion problems, allowing grids to deploy substantially more renewable energy. By deploying more solar and wind, these generation technologies will likely fall even further down their respective cost curves, bringing them closer to zero marginal cost energy production. About this memo: the Bitcoin Clean Energy Initiative has developed this short research paper as a starting point to share our vision for how Bitcoin mining, in conjunction with renewable energy and storage, is especially well suited to accelerate the energy transition. To complement this work, ARK Invest has contributed an open-source model that demonstrates how Bitcoin mining could augment these renewable and storage systems to supply a larger percentage of a grid's baseload energy demand for comparable or lower-cost unit economics. This work is merely the beginning of what we hope will be a fruitful exploration of solutions to help usher in an abundant clean energy future. A unique energy buyer. Bitcoin miners are unique energy buyers in that they offer highly flexible and easily interruptible load, provide payout in a globally liquid cryptocurrency, and are completely location agnostic, requiring only an internet connection. These combined qualities constitute an extraordinary asset, an energy buyer of last resort that can be turned on or off at a moment's notice anywhere in the world. Renewable energy is now the cheapest energy. The levelized cost of energy for solar and wind has fallen 90% and 71% respectively over the last decade. The unsubsidized costs of solar and wind energy are now 3 to 4 cents per kilowatt hour and 2 to 5 cents per kilowatt hour respectively. Certain individual projects have had even lower costs. For context, the average levelized cost of energy for fossil fuels, such as coal or natural gas, is 5 to 7 cents per kilowatt hour. This means that solar and wind are already at a lower price point than coal and natural gas. Solar and wind energy also just reach cost parity with both geothermal and hydroelectric, which at around 3 to 5 cents per kilowatt hour are inexpensive but geographically limited. There will always be inexpensive individual sites for different power sources like hydro or geothermal, but on the whole, solar and wind are now the lowest cost and most scalable. What's more, we believe that they will only continue to get more affordable over time. We believe this is especially true for solar, a semiconductor technology which has consistently declined in price by 20 to 40% per doubling of cumulative capacity deployed. Temporal supply and demand mismatch and grid congestion. Solar and wind energy, however, both suffer from one major deficiency versus more expensive baseload power like natural gas or nuclear: its intermittency. In the energy industry, this results in what is known as the duck curve. In essence, the sun shines during the day, but not at night. Wind is more unpredictable, but tends to blow more heavily at night. Energy supply, therefore, is either abundant or non-existent. Demand, however, peaks around the late afternoon or early evening, when people arrive home and turn on appliances, at which time neither solar nor wind are abundantly available. The end result is significantly more power than society typically needs for a few hours of the day, and not nearly enough when demand spikes. This same challenge also plays out seasonally, as the sun shines more during the summer and the wind blows more during the winter. These deficiencies are further exacerbated by grid congestion, which is similar to highway traffic and frequently occurs because solar and wind projects are often built in rural areas with lots of sunlight and wind, but little nearby load and transmission capacity. Because of these challenges, there are over 200 gigawatts of delayed solar and wind capacity currently in just 3 U.S. grid interconnection queues. These are solar and wind projects which have developers and financing readily available but which grids physically cannot accommodate. Increased transmission capacity and energy storage will be critical to solving these problems, especially as lithium-ion batteries continue to fall down their cost curve. For the moment, though, utility-scale batteries are still too expensive to deploy universally. After they've fallen another 80% in cost, they will still face physical limitations around their useful lifespan and for how long they can store energy without dissipation. They will, however, be the most critical technology in storing inexpensive midday solar power for evening peak demand. Bitcoin mining is an ideal complement for generation and storage. Bitcoin miners, on the other hand, are an ideal complementary technology for renewables and storage. Combining generation with both storage and miners presents a better overall value proposition than building generation and storage alone. As mentioned before, there will always be physical limitations to how much energy can be cost-effectively stored without dissipation. However, the daily intermittency challenge can be met almost entirely with just a few hours of storage capacity. By combining miners with renewables and storage projects, we believe it could 1. Improve the returns for project investors and developers, moving more solar and wind projects into profitable territory. 2. Allow for the construction of solar and wind projects even before lengthy grid interconnection studies are completed, as Bitcoin miners can off-take the energy until selling to the grid becomes possible. And 3. Provide the grid with readily available excess energy for increasingly common black swan events, like excessively hot or cold days when demand spikes. Note that this excess energy will also be quite useful as society's electricity demands increase with the proliferation of electric vehicles and the electrification of all devices. In a sense, the unlimited appetite of miners allows them to eat whatever remains of the duck's belly. Given these benefits, we believe it makes logical sense for utility-scale storage developers to augment their current battery offerings with Bitcoin miners. Long-term implications. We believe there are 2 large implications if Bitcoin mining becomes normalized as an energy buyer of last resort. First, the amount of solar and wind energy on the grid could increase dramatically. As noted before, there's currently over 200 gigawatts of delayed solar and wind capacity in the interconnection queues of just 3 U.S. electricity markets. For context, that's approximately double the amount of solar and wind capacity currently installed there. As society starts deploying more solar and wind, we believe it should bring their levelized cost of energy even further down their cost curves, making the next batch of solar and wind even more affordable. If the levelized cost of energy falls, it could potentially unlock profitable new use cases for that electricity, like desalinating water, removing CO2 from the atmosphere, or producing green hydrogen. Some experts in the field expect that the marginal cost of producing new electricity will actually approach zero. The second major potential impact could be a sizable transformation and greening of the Bitcoin mining industry. It's estimated that there's only 10 to 20 gigawatts of mining capacity worldwide today. Deploying miners at even 20% capacity with the before-mentioned 200 gigawatts of delayed solar and wind projects on U.S. grids alone could result in 40 gigawatts of new mining capacity, effectively dwarfing the entirety of the existing global market today. Note that while many of these projects would likely be built behind the meter to utilize otherwise curtailed solar and wind power whenever possible, they would still likely mine with grid electricity during other periods when profitable to do so, so it wouldn't be entirely green from day one. But if solar and wind become even less expensive and constitute an increasingly large portion of baseload power, the ultimate trend would continue, moving quickly toward renewable-dominated hash rate. We believe that deploying such a large amount of new geographically diverse hash rate would also have the second-order consequence of strengthening the security of the Bitcoin network, potentially further entrenching Bitcoin as a sound currency for all. This section of the memo was written by the team at ARK Invest. With real-world data, we, ARK Invest, demonstrate that Bitcoin mining could encourage investment in solar systems, enabling renewables to generate a higher percentage of grid power with potentially no change in the cost of electricity. Without Bitcoin mining, solar, an intermittent energy source, could supply only 40% of grid power before utilities would face the need to fund significant investments with higher electricity prices. With Bitcoin mining integrated into a solar system, however, energy providers, whether utilities or independent entities, would have the ability to play the arbitrage between electricity prices and Bitcoin prices, as well as potentially sell the surplus solar and supply almost all grid power demands without lowering profitability. The graph above illustrates the impact that Bitcoin mining could have on the adoption of solar systems. Assuming a constant cost of electricity, it traces what percentage of power solar could provide to the grid. The y-axis is the power generated by solar, and the x-axis is the battery capacity. The size of each circle is proportionate to the size of Bitcoin mining operations. At each point, the solar system provides a different percentage of the grid's needs. As Bitcoin mining scales, the solar system increases in size and provides a higher percentage of the grid's needs. Increasing Bitcoin mining capacity could allow the energy provider to overbuild solar without wasting energy. In the bottom left of the chart, in the absence of Bitcoin mining, renewables can satisfy only 40% of the grid's needs. In the top right of the chart, including solar, batteries, and Bitcoin mining, they can satisfy 99% of the grid's demand. Bitcoin mining could encourage investment in solar systems, enabling renewables to generate a higher percentage of grid power with no change in the cost of electricity. Our model demonstrates that integrated Bitcoin mining could transfigure intermittent power resources into baseload-capable generation stations. It suggests that the addition of Bitcoin mining into power developers' toolboxes should increase the overall addressable market for renewable and intermittent power sources. All else equal, with Bitcoin mining, renewable energy could provision a large percentage of any locality's power economically. As a follow-on effect, cost declines associated with the scaling of renewables should most likely accelerate, leaving them even more economically competitive at equilibrium. Next steps. There are still some important remaining questions about how the above vision could play out. We see at least 3 meaningful business opportunities. 1. Energy management software and services. Energy management companies that specialize in both storage and mining could build software to decide in real time the best use for a newly created electron, whether to use it, store it, or mine it. They could also provide key asset management tools and analytics to monitor project performance. 2. Energy miner marketplaces. Managed marketplaces could emerge to connect project developers, miners, and financiers. One key challenge would be solving the current creditworthiness threshold requirements for existing miners. 3. ASIC manufacturing. New chip foundries could be built to meet the expected surge in demand. Samsung and TSMC are leading the way with recent announcements of new North American plants. We also expect to see continued hardware and firmware improvements to increase the durability of mining equipment optimized for interruptible power usage. Call to action. The Bitcoin and energy markets are converging, and we believe the energy asset owners of today will likely become the miners of tomorrow. Utility executives, sustainable infrastructure funds, and the grid-scale storage developers are well positioned to expedite this future by aligning their strategic roadmap and deploying large-scale investments into the emerging synergy between Bitcoin mining and clean energy production. We plan to follow up with more research explorations and additional resources focused on the intersection of Bitcoin and clean energy.